and Q size hit the bid.
Hello, how's it going? Thought I'd jump on the mic, it's easier to chat rather than typing. So we're not seeing a lot happening so far. We had a nice liquidity grab above Friday's high on ES and NQ. Gold is opened pretty big, there's not been a lot of selling going on. Oil's just doing the same, it's just filled the gap. So nothing exciting. ES is this this 80 lot at 166 spot 75 has been sitting there for about 15-20 minutes. So like your style, yeah. Yeah, ask any questions you've got. Any questions you've got at all. So I've got a theory with how this goes on here, right? Especially in Asia session. So I'm gonna minimize this a little second and I'll show you what I mean. So the market's extremely slow right now. Okay, there's not really anything happening. Um, you know, yes, this is such small volume, but what happens all the time in these markets, right, is they basically cap the range. So we can see that someone's got 50 contracts sitting at this price. Okay, now you can see there's 90 here, 66, 62, 60, 65. Not one of these orders is greater than 50 contracts. So what that means is it's just tons of small orders um, that are sitting at this level, right? So after staring at the DOM for so long, these are likely to be pulled, right? And this has been sitting here for, gosh, at least since this stream has started, um, this price. And you can see there's someone sitting up here with 100 contracts. Now, of course, if price comes up here, these can move, but the longer these sit here, then the more likely they want filled, right? So we already sweep the highs, and then you've got these massive amount of orders. But typically, what is seen on the DOM is these orders typically just set the range. So what the market likes to do is it likes to just fill them out. So we've sat at this price, these three prices here on ES for the last 20 minutes. Market's not done anything. ES is probably down here. Um, and what you'll probably find is over the next couple of hours, the market is either going to break, right, go down and fill out this order down here. Okay. Now there'll be some retail traders that'll be buying right now. I don't know why loads of people will be getting involved, but they are. They're not looking at this, so they're just seeing different things, and then they'll get stopped out, and then it will go down and fill this order, and then it will just go back up to the point of control, and then we'll just range around, then we'll go back up, fill here, and then we'll go back and just, it'll be something like a 30-40 tick range for the whole of Asia until London Open, and then something will happen. That's typically what happens all the time, you know. I would say you could trade it, but to be honest with you, it's, I think if you're going to be taking 1 and 2 to 3 ticks, you need to be going to treasuries to trade, you know. So hopefully that makes a little bit of sense, for how it's done. And NQ is just basically ES times 10. You know, it's wild. I mean, look how thin the book is. It's ridiculous. There's like 2, 5, 1. I mean, You could go into NQ right now, and if someone would come in and just market 20 contracts and see how much it would dump. So, um, one thing I would love to do, right, and it would be a really interesting experiment, is like NQ, right? Because this is what the way you need to think, right? If you were a big institution right now, okay, um, and you had say 300 contracts to execute on NQ, right? Look how thin that book is. I mean, there's 4 bids, 2 bid, 5 bids, 2 offered, 3 offered, 1 offered, right? And we're at the point of control, 195 contracts traded. If you had, say, 100 contracts to execute on the bid, right? Now, bearing in mind, um, we don't know why they're trading. You don't even need to know the why, to be honest. But if you were a large trader and you had to execute this, you can't just go into the market and just dump 200 contracts to sell, because you would, you know, if we look at this, if you went in right now on NQ and had 200 to sell, you would absolutely smash the price all the way down here, you know. So you can't do that because you get really bad fills. So what they would do is they would say, right, I've got 200 contracts to execute at buy side for some clients, as an example, right? I've got to get them off. But they have their own book that they manage, large firms and traders and multitudes of them. So they can say, right, all these people have been buying so far today. We know there'll be stop orders down here, and we know that someone's flashing this 35 down here. So likely people want to be buying down here. So right now, at this price, we can see that there's maybe, what, 50, 60 contracts sitting here, in total, roughly. So this is not going to cost them a lot of money to just gradually feather into these prices to drive price lower, right? And then ultimately get more liquidity to actually buy the 200 orders that we used as an example, you know, because they want to get the best price for their clients, and they want to make margin on their own book. It's what market makers do as well. It's what everyone is trying to do at big firms, but retail is not trying to do that because they're just randomly
ES
buying and
size
selling.
lift the offer.
So these alerts, just in case you get a fright every now and then when they go on. ES, the filter is greater than I think it's greater than 100. I've got. I need to double check that, but greater than 100 for ES. I think NQ is 30, and the same for oil and gold. Just in case you hear them, it's just an alert to let you know that some size has been traded. And again, it's been done at the point of control. So hopefully that makes some sense as to why. The number one thing I could probably say to people that are learning this is, if you're looking if you're looking to get in at a high, you're always better to wait until the high is taken or the sweep happens, because if it's sitting right now at this low, right, there's been probably 2,000 contracts traded here. Now people are going to be stopping out down here. This level is actually, I had this on from Friday session, so this is not this session, this is the low of the session, the red line. So if people have bought, their stop is going to be somewhere down here. ES is the same as NQ, so it's a little bit more money, but everything is relative, right? So that's just how to look at it. Be interesting to hear your thoughts and how you see that, to be honest, and how that and that's typically why a lot of people think, oh, they hunt my stops, and they're not hunting. Large firms don't give a shit about people taking 1 and 2 lot positions, right? They just don't care. It's just where the collective, where the collective put their stops, and It's always, below a below a pre-market high, below yesterday's high, above yesterday's high, or something along those lines. It's not rocket science to know, looking at a chart, where they're going to be. But yeah, I mean, this is just untradeable, isn't it? Really, I normally put this on just to sit and chillax, watch the markets, and then we can discuss order flow. But as you'll notice, there's not a lot of people that trade order flow, to be honest with you, or at least do it properly, in my opinion. You know, a lot of people use footprint. Footprint is okay, but you're not seeing the resting orders. I mean, we've literally moved like 4 ticks. I mean, gold is moved 4 ticks in 30 minutes. And even NQ is not doing anything. I mean, there's just nothing to be had. The way that this is shaping out on ES, like I'd said, I'm expecting this to break these lows, fill out here, go back up and chop around point of control, fill out here, you know. But the question of all this, man, is always when. When is that going to happen? You know, like if that's your bias, you would need to see some volume coming in, in order for that to happen. They're all flat right now. Yeah, yeah. Everything is just completely flat. I mean, everything's just sitting around the point of control. To be honest, we'll maybe see something happening in the next 4 minutes. To be honest, after the first, I mean, the gaps are filled as well. There's normally a little bit of opportunity when you get quite a good gap, but the market didn't really gap. To be honest, if it gaps like 100 ticks or something, it's normally quite good to fade the gap after you see some exhaustion. No, no, I don't really trade Asia session. I mean, sometimes there's some opportunities about. Well, I don't know what time zone you're in, but I'm in GMT. So around about my time, the market opens at like 6 p.m. US. So it's 11 p.m. for me. So there's normally some opportunity about 2 a.m. my time. So it's a good 3-4 hours into the session, and the typical trade, if I was to trade Asia, is just never going to be continuation. There's just never really continuation in these markets. These markets are driven by algorithms that are simply um, their game is just something is out of whack. Uh, let's feed it back to the point of control. Oh, you're from Italy. Nice. Okay. It's 1 a.m. Yeah, so you're an hour ahead of me, right? Yeah, sweet. So it would normally be about 3 a.m. your time, which to be honest, there's no point of us even really being awake for that, right? Because you can easily just trade either London Open or just regular trading hours. The most money is made in regular trading hours, that's just the way it is. Just when cash is open. That's why it's called regular trading hours. And the time frame for us, or for you anyway, for that would be 3:30 p.m. for US equities. For me, it's 2:30. And then it closes at 10 and 11 o'clock or 11 p.m. for you. So, but typically the trade uh, for like NQ or ES, if you are trading in Asia, is you're just, if something goes like 15, 20 ticks away from value, and it's maybe at a confluence area, like yesterday's high, or yesterday's value area low or something, you just be fading it back. Yeah, exactly, exactly. I mean, you're there's not really a point of trading Asia, to be honest. I've seen some people like 3 minutes from opening have taken a trade already. It's crazy. Um, I just to be an ES more specialist side, to be honest. An ES, and really focus on it. But over the years, I've mainly um, focused on other markets, just because I find that if you're only focusing on one market, you kind of force trades a little. So on my other deck, this is just my ladders that I'm streaming here. On the other streams, I sometimes bring them in, but ladders is nice and chillaxed, especially at these times, because you can't really talk about very much as the market doesn't move. Um, you know, so I mean these times, man, it's literally just algos trading. I mean, this is like the perfect example of algorithm trading right now. It goes 42 bids. It ticks down, and then we'll probably, it's hit into the bid, and then we'll probably see this lift the offer now, and then we'll just go around these prices. To be honest, see, we just saw that tick down there. That's just complete algo trading. You know, they're just bouncing around, and the thing is, it's crazy. That's a tick to them, right? They're scratching on trades, and then they're taking a win. Now we're back. It went down 2 ticks, and now we're back at point of control. I mean, we can't trade that. But algorithms that are constantly refreshing these orders all the time to get a good Q position is perfect for them. 17 hit the bid, then it'll go 14 offered, 17, 18 bids, and it just goes from these prices. But that's a tick to them. If they can get filled there and get out there, then they've made on a contract. They've made, their commissions are pennies. So obvious, but yeah. Honestly, man, really, really good advice. If you bring up, I mean, have you ever checked a full chart for ZN? Have you ever looked at that? Let me. I'll change up the middle one here. Have you ever seen it? Let me bring up. Let me just change it for a wee second. I'll bring up ZN. Right, this is going to be crazy, right? Look at the. Pay attention to. I'm going to change CL for you because it's doing nothing, right? I'll change this to ZN. ZN, like people say that it's really liquid, but wait till you see how thick the market is, man. It is like it's you need to have patience of a saint, to watch it. So I'll change this up for CL, but just pay attention right now. There's 16 bids. We're actually selling off a little bit here. This is we're selling off a little bit. We're going to potentially break these lows, but we're not looking at CL anyway. So let me just quickly change this. Give me 2 ticks. So I'll just go to my ladders and adjust, and it was CL, and then let me just adjust this, and it was ZN. ZN, here we go. June. look at this market, man. I'll need to adjust this. It says CL, but crazy market, honestly. Look at this market. Look how thick this market is. Oh god, it's fantastic. Yeah, NQ is crazy. Yeah, so basically the ZN, you're probably looking at something like, I think the going average for that's 27 ticks in a day. So if you're to start out on ZN, and you're really going for something like a 6 to 8 tick stop, and you're looking to try and take 1 to 1 or 2 to 1 from there. These are the type of markets that you see scalpers getting in and just taking 2 and 3 ticks. The tick to commission ratio uh, on the treasury markets is really really low. So I think you're like a couple of bucks, but then um, the amount per tick is like, I think it's like 15.75, so 15 bucks and 75 cents or something a tick. So you're getting much more bang for your buck for the commissions for it, and obviously it doesn't move as much as well, so you're not going to have these big crazy blowout days. But you're right, ES is still pretty volatile. I would say, man, if you wanted to start, go to treasuries. You know, cut your teeth in there, build a strategy around it, and look for something that's repeatable. Because I mean, look at NQ as an example. NQ's probably moved about 60, 70 ticks, and ZN since the open is, it's moved 7 ticks. One, two, three, four, 6 ticks. It's been a 6 tick range, which is crazy, and there's so many orders. Yeah, you've got ZN and ZB. ZB's like the big boy of that one. It's like $31 a tick. So one contract on these things is plenty. But if you're going to be trading NQ and ES, just go with micros. Honestly, you know, I know it's a little bit more expensive to trade micros, but you can still make fantastic money and then just copy it across to different accounts. I don't know. Are you going down the prop firm route, or are you trading a personal
CL
account?
size hit the bid.
I'll need to adjust this back here
CL size lift the offer.
because that's giving me the that's giving me that alert for that short. Put this back to CL. IMAX, is it not? Yeah. I'll just change this here. MCL. There we go. Yeah, that's the way to do it, man. Yeah, so the commissions are pretty rough on micros, but to be honest with you, when you're trading NQ, right, it's such a wild asset that you can make, you know, it's like micros are bad if you're scalping, right? But realistically, majority of people get wrecked scalping. So on NQ, you can easily make of a day on a move like 100 to 200 ticks, to be honest, with a decent enough move. Now, if you're trading two micros with that, as an example, okay, um, that is it's 50 cents a tick, you know, and if you're trading, one micro and you take 200, it's 200 ticks, it's $100, and you're taking two losses, 200s, it's plenty. Yeah, exactly, exactly. I mean, to be honest with you, man, I much prefer being in and out of trades quickly. Um, I would rather have like a 70% win rate, and just about 1.2 R, 65-70% win rate with about 1.2 R on my trades, rather than at the sort of 45% range with like a 2R return. Anyone that tells you they've got 70% win rate and like 2R is
GC size lift the offer.
it's just not a thing.
GC size hit the bid. GC size hit the bid.
Got some size coming in on gold. How's these orders, these alerts? Do you want me to turn these off? Are they annoying? It's probably a good question to ask you. And I'll go back on to the. Let me know if you want me to mute the alerts. And I'll go back on to the track for what you're saying. But yeah, I mean, trading view is not great. I mean, I first. Yeah, exactly. I mean, 70%, mate, on. I don't worry about this. Okay, cool. Right. So the 70% on 2R that's just ridiculous. Anyone that tells you that, uh, that's how you when you go onto YouTube channels, in my opinion, and I'm here to try and help people trade and to build a nice community that actually wants to use order flow and to really get into the nitty gritty and the granular detail of the market. I'm not going to start posting, people post shit about, oh, here's a moving average
GC
and
size hit the bid.
a moving
GC size
average.
lift the offer.
Um,
GC size hit the bid.
these alerts are actually annoying me, to
GC
be honest.
size lift the offer.
Yeah, I'm
GC
gonna mute
size
these.
hit the bid.
Let me mute them. They're annoying me when I'm talking. So, yeah. So YouTube channels that are posting stuff about, oh, this moving average crossover or this indicator or whatever. Look, if it was that easy, we would all be sitting in a pool, taking an indicator and pressing buy and sell. It doesn't work like that, you know. So anyone that tells you that they've got 70% plus at 2R, be very dubious. There's either one of two things there. They could have that, but the trade frequency, they're trading like, once a week, for example, right? So that works if you're only taking one trade a week. As soon as your trade frequency increases, you're either going to be in the 1 to 1 to 1.5 to 1 camp, and that's above 50% win rate, or you're 2 to 1 and at the sort of 45 to 55% win rate. That's pretty much it. And to be honest, I wouldn't knock TradingView. TradingView is really good to chart and to do charting, and it's got a lot of cool custom indicators. The only thing is it's not great for order flow because it doesn't have tick data. Um, and I've never actually, I don't even know if they even have a DOM, to be honest. Like I've never seen anyone ever post anything on TradingView about a DOM. Um, you know, But it's a good place to start. I use TradingView if I'm out and about. I go on my phone. Obviously, Sierra's a really powerful platform, but I can't use it on my phone or anything. How's the audio as well? I'm gonna turn it down a little bit. Yeah, that's exactly it. I mean, TradingView is extremely easy for a beginner. That's the market that they've gone for. Um, Now, when I started many years ago, I started in CFDs and FX. Um, and one of the things that piqued my interest years ago was when you're looking at a candlestick, how what makes a candlestick move? Why are some bigger than others? And ultimately, then you end up at order flow. On the resting orders, no execution nor pulling. Oh wow. Okay. Okay. That's actually something I never got to cover on my recent DOM video. Was the pulling and stacking. So the left here, we'll look at ES. The left column, you've got the pulling and stacking, and the right you've got there. So you can see that the offer is really stacked right now. We've had NQ break the lows. So like I'd said, that what was expecting to happen because of the orders that were sitting there. Um, so ES is already broke away from here, and then typically ES, because it's really volatile, will be the first one to go. So we'll see what happens. The fact that this is dropping here, we should probably see this go down, and then we'll see how the market reacts to this 50 lot that's been sitting there for a while. But ES is, sorry, NQ is already sweeping, and we've seen some absorption here. There's 23 hit the bid, so we'll see if that's going to hold. There's 22 lift the offer here. So there was someone absorbing 22 contracts in NQ at this time, which is quite interesting, you know. So, but ES has been here now for over an hour. There's 1,000 contracts traded here, so something's gonna have to give, right? We've already had the stop run to the highs and filled the gap, so I wouldn't be surprised if we go down here. But if you saw that in the DOM there at this price, it was 22. You know, someone sold 22 contracts and someone absorbed it all. So, but the pulling and stacking is pretty important because you can see just by quick glance that right that I've got this set to 10. So in ES is 58, 58, 60 stacked, and then there's 9 and 10. So it constantly changes, but it gives you a rough idea of who's stacking the most and who's pulling and how price is cutting through. To be honest, so in NQ you can see the bid's been pulled and the offer's been stacked. But it's really volatile. So we're just visiting this price that we absorbed again on NQ. So we'll see if sellers are going to smash through. My likely thinking here would be because ES has sat here for so long and we've got this 50 lot down at the bottom, um, it's looking unlikely that we're going to go bid and break the highs at the minute. NQ is probing these lows, so we're likely to see a break here in ES, and then we'll go down and fill this, and then probably go back up and fill out this area again. Most likely, that's probably what's going to happen over the next hour or so, just simply by the order book as to what's happening. But what markets do you mainly trade? Is it ES or NQ? Oil's a pretty rough market. I would stay away from that one, to be honest. If I was to pick a market out of the volatile ones, it'd probably be gold. To be honest, it's a nice ranging market, but I'm not really a trend. I'm not really a trend trader, to be honest. I'm more mean reversion. So this is interesting if you look at NQ now. So we saw that 22 lot was absorbed down here. There's 34 lots that was executed down at that price. Okay, the markets then went bid, and so is ES. ES is still there, but it's ticked up a few prices, which is something for ES. And now in NQ we have we've got 30 flashing and at this price and 30 here. So most likely the person that absorbed the 22 lot down here, because 22 at this current, in Asia is quite a lot. So, someone that's hit the bid with 22 lots and someone's absorbed, it's most likely the company or firm that is doing this, which means that they potentially have a lot of buy orders to fill, which is what we discussed earlier. You know, they were flashing down here. Normally they have a lot more size to get off, so they've absorbed, and now they're then flashing down here. So interesting. I've been trading. This is my 10th year trading. Long time, man. Many hours I've spent looking at charts and reading markets and stuff. And if a human spending that much time reading markets just by looking at them, can you imagine what AI and these algorithms that are in the market are doing? You know, when one human um, can have a rough idea of what the market is doing through order flow. No, so I work from home. I run a tech company, um, but I trade probably 4 or 5 hours a day, and it's my second income. To be honest, the reason being um, is trading. Trading in itself is a risky business, of course, um, and it's just good to have a fixed income. To be honest, so I work remotely, anyways, so it works well. Let's see what's gonna happen. There is someone really absorbing any selling at the moment on NQ. So we're gonna see if sellers were to go down here, they would be taking out those orders. But I trade a personal account, and I trade with some prop firms. I've been through the prop firm game a lot. I've had accounts with FX ones that I was swing trading, because obviously you can't swing trade futures. Personal accounts. I don't really hold overnight either. Just day trade with I've had prop accounts with Apex and Top Step, and then CFDs and FX with swing trading. This dude is really 30 and 27 now showing on NQ at that price. Really want to see what happens if sellers have to drive price down here. Like, they need to be taking that out, you know. And these 7, 4, and 6 lots are trying to front run that order. To be honest, some poor smucks are front running that and they won't. They're just instantly pulls. You see that on NQ. Yeah, exactly. I mean, put it this way: if I if it was like a manual labor job I was doing or something, I would just trade. So right, NQ's at this price. Let's see. So sellers have taken the full amount. They've just hit 60 lots. So either one of two things: the buyers just got filled, and now we're going to just bid up. That was interesting that they've taken that whole amount. Um. So, anyways, but yeah, it's good to do both. It gives me flexibility, to be honest. And if I was only trading, you know, yeah, it's not a standard job, is it? Right, where you don't work every day and earn money. But losing is part of the game, and that's the number one thing that every trader struggles with, especially when you start, is losing. Like, it's why I say start with micros, is because you need to learn to lose. Like that is it. You've got to be cool with losing. And if you take a managed loss, right, and say whatever it is for an amount, just say it's a managed amount that you're comfortable with, right, then that is absolutely fine. The objective in this is green days and winning should take care of itself, right? The objective should be to not let your losing days go off the page, you know. Um, so that's why it's difficult for traders, because it's ingrained in your brain that you're working hard at this, you're putting time in, and losing is not something that people do, because they've worked hard at it and they expect to to get a reward, or they get paid for it, you know. And that's where it should be seen. Trading should be done more over like at least a month or a quarter, to see how you've done over a sample of trades. I mean, it's 2024 now. You don't even need to, to really deeply journal. You can just export your trades and import them into a trading journal platform, and it gives you all your edge. You know, it's like 30, $40 a month or something, and you can tell you what your expectancy is, what your profit factor is. You know, yeah, exactly, man. I've all done it. I can't tell you the amount of times in 10 years I've done that. Literally the green days take care of themselves. Got no problem putting in really good green days. In fact, a lot more green days, and then the one red day kills you. So what I would advise is you take your average a green day, and just set that as your daily loss limit. And the trouble is, I don't know how you are as a person, but when you're losing and losing, of a day, you need to set some hard rules on your platform. So if you lose that amount, it locks you out, to stop you going nuts and stop clicking the mouse. Yeah, that's I put those like hard rules in place years ago. Made a big difference. And size down. It's done one thing too. Yeah, exactly, exactly. I think to be honest with you, the best way to do it is just trade micros, put your stops in, right? And if you know your stop's going to be hit, because you can tell, right? Just just walk away before the stops hit. You know what I mean? Just say, screw it, go and, you know, make a coffee, or, go for a walk or something. It's the easiest way to do it, to be honest. And then you'll probably come back with a bit of a fresh mind and see things clearly. Easier said than done, but, I would definitely look at putting hard rules in your trading platform. Yeah, no, that's a good idea. But in terms of the daily stop loss, I don't know if you're using prop firms to be honest, but like I would work it on your average um work it on your average green day. So say your average green day is, I don't know, $400 or something. Make that your loss, your maximum loss for the day, you know, so that if you do have a shocker of a day, it's just one green day. Do you know what I mean? As soon as it starts becoming like 2, 3 green days is when you start being annoyed with yourself, because then you're then going to basically have to work that week to just to to get back to enough break even. So it's back to the to what we discussed earlier. Um, just try to not let your losing days go off the page. You know. Um, and typically when you have those big raid days, when you go back a day later and you look at the trade you've taken, you're like, I wish I could have just closed that for the standard loss. It happens all the time, and it's back to the fact of losing. You need to be cool with losing. That's all it is. Accomplish that in trading, and you will be better than 80% of people. Very simply, and I can tell you that from doing it for 10 years. That's the number one thing I would say to you, man. Is learn to be okay with losing. It's literally part of it. You know, Vegas is made on like a 3% house edge. 3%. And in trading, we have a massive edge. We've got a huge edge, way more than 3%, you know? But the thing is with Vegas is they don't run out of money, you know, um, and that 3% plays out over a much longer time. So that's why you've got to be able to come back tomorrow and come back next week and be able to trade. If you go all in, full port, you end up screwed. So exactly, exactly. That's the whole point, you know. I've done that loads of times. You know, you make a standard loss day into 2 or 3 losing days, and then you end up annoyed. Where if you just took a managed loss day, like a $400 loss that day, and you make it back the next day, you end up the week. You know, I would typically say that my trading days, I'm about 75% green and 25% red. So that's why when I have a bad day, I make sure that it's not any more than one of my average green days, pretty much. And if I have a bad day, I just say, well, shit happens. It's get it tomorrow. But when you're trading order flow, to be honest with you, you're either right, like you're really right, and you're in profit really quickly, or you should almost have a countdown timer, to be honest, because the order flow trades work really fast. Um, I'll caveat that, by the way. If you're going to trade ZN or any treasuries, they're much slower. So, but if you're trading like ES or NQ or something, they tend to work pretty quickly. So, the ones that you hold, oil is absolutely dumping right now. CL, jeez. See, that's why like oil is a tough market. Look at the amount of contract for oil at this time traded at each price, and there's hardly any buying as well. As a scalper, how many trades do I take a day? So I would say I'm typically about 3-4 trades a day. The amount, I'm not massive like that. I look for about 3-4 setups. Some days I take more. Um, some days I'm recycling the same trades. And what I mean by that is if I catch the first fee reversal, take profits back at a value area, market comes back up, we see a sweep of the high, I'll recycle that trade back down into value. There's 2 trades, but I would say no more than 10, but my sweet spot is about 3 or 4 trades a day. And my average hold time, and I'll tell you exactly what my average hold time is, buddy. Um, mm, mm, mm. Let me just. Do you want to know what's my average hold time in winners? Let me have a look. Right, my average hold time on winning trades. My average hold time in winning trades is 1 hour in total. And that's me holding for quite a lot of decent size amounts, to be honest with you. That's not like a 6 or 7 ticks, but my average winner's hold time is an hour. I can probably guarantee that my average losing trade will be longer. Let me see that. Mm-mm-mm. No, my average losing hold time is the same. That's interesting. That's what I like to see. Good. So my average hold time across all my trades is 1 hour, which is good. To be honest, I'm pretty happy with that. But sometimes, you're right really quickly, and if you're holding a trade and you're in it for 3-4 hours, and it's sitting there, my stats tell me that you know I should probably just scratch. To be honest, I can see if I can tell you what my average number of trades is. Does that tell me? Average number. Okay. So, according for my stats, average number of trades, including recycling, is 7, but never really more than 10. I tend to recycle trades quite a bit, depending on the setup, of course. But my sweet spot, I would say, is if I get 3 or 4 good setups of a day, I don't really look for any more, to be honest. Hopefully that answers your questions. That's just directly from my trading journal as well. Oh wow, how many trades do you take? Do you take a day then? Yeah, exactly. Exactly. I'll do a video at some point on the levels that I use, because I'm not sitting just staring at the DOM like this, right? I do this when the markets are slow, um, just to watch order flow, to be honest. But when it's in regular trading hours, I have each specific chart in its own with its own DOM and its own chart and stuff, and then I use market profile to gauge context. I won't. I would focus on order flow first and then add market profile in after it. I don't know if you've looked at that before, but market profile is great for context. I use that um, as well. Yeah, honestly, this having access to all this data is one of the most powerful thing about futures, because you know, granted they'll be seeing things slightly faster, but everyone sees the same prices that are on the DOM. So whether you're Goldman Sachs or sitting here, right, they can see the 50 lot, it's sitting in ES, for example, right now. To be honest, they can probably know who it is. but say you say you're taking 15 to 20, like, do you scratch your trades a lot, like break even? How many ticks are you going for? Digging deeper into your stats, what's your max favorable, um your sorry your you need to basically determine your max adverse excursion, right? Which is the MAE, which is basically when you're in a trade, how many ticks does it go against you before becoming a good trade, which determines how good your entries are. Um, and then the other one is essentially is your favorable trades. So when you actually take a position, how how quickly. Sorry, I just put myself on mute there. How quickly does the trade go in your favor? And when I say quickly, I mean how many ticks does it go in your favor before you either stop out or so on and so forth. So these are some numbers that you should look at. Well, and yeah, that's a really good point, right? One of the key skills in trading that I take for granted for doing it for so long. Oh yes, is at the lows. Nice. Let's see if we're going to go. It'd be interesting to see in this session, mate, if we can go down and touch the 50. It's good, it's honestly good. I aim around like 4 or 5 ticks in ES. Right, okay. So the thing is, with you saying you're going for 4 or 5 ticks in ES, right? My instant thoughts on that is your risk to reward is skewed, because the amount of times you take a trade on ES and you're 4 or 5 ticks offside is a lot. So that would then tell me that most likely the problem with scalpers is they take their profits really quickly and they hold the losing trades too long. That's the number one issue that happens with scalping. And you end up with this like 80% win rate, but then when you lose a big chunk. You know, that's typically the main problem that happens, I would say. Because 4 or 5 ticks on ES is, don't get me wrong, you could probably get that pretty frequently. If I was scalping ES, the minimum I would take would be 10. But yeah, you're never gonna have a one-to-one risk to reward just taking 4 or 5 ticks. You'd be stopped out too much, man. Um, And I know that because I was a specialist in ES for years. Um, I would typically go for 10 to 15 ticks on ES, and you can and you need to time that at key points, and it's normally at swing points you want to be getting in, right? But here's a scenario for you, right? You're better trying to go for a little bit more ticks, like 20 to 30 ticks, right? And just trade less frequently. You pay less commissions, and you'll need to catch, you know, one or two trades a day, to be honest. Now, saying that, my average is 7, right, across the board. But to be honest with you, I typically trade smaller than what I need to, um, so that I'm always going to be there the next day. You know, I actually under leverage, to be honest with you. Now, we see the yes break the lows, very nice. To be expected with what's been happening. It's literally not broke above the point of control in like since we've started chatting. And it's hard to condense what we're discussing. You just need screen time, to be honest. You need to, yeah, that's a really good start. Look for something that's repeatable, um, you know, and you don't need to trade as much, to be honest. It's easier on the soul. Yeah, exactly. Um, let's see what happens when price goes down there. I'm going to move the DOM a little bit and recenter it actually. Um, so let me just go to these orders. I'm just going to recenter, and we'll see. So you can see the size coming in. I don't know if you can see the. I don't think I'm capturing my mouse. Um, but 60 just hit there. There's some serious size coming in. It's being absorbed right now actually, but we're going to see some dumping, and we'll see what happens when price goes down here. Now what's interesting is you can see 119 here and 102, yet nothing is above 50 contracts. So they're likely going to be pulled. So someone is scattering 50 lots down here. So somewhere around these prices, someone is willing to buy. Okay. Gold is doing nothing as well. Normally it's correlated to these. So we can see that there's 16, there's spreads happening a little bit. So sellers are just chewing into the bids at the moment. There's two lifted the offer there. It's 9 lifted the offer. 18 bids. We can see there is some absorption happening. Be interesting to see the 140 and 111 as well. What happens down at these prices? Because I think that 140 here is sitting right. Yet not one of the orders in that 140 is greater than 50 contracts. You can see the offers stacked as well, 60, 61, 62. Relatively balanced at the moment, to be honest. And there has been 170 contracts just traded, and NQ's going bid a little. Mm. We're now, that's just broke the lows. Now this is just what's happening right now is the classic, break of the lows, then retest of the low. It's basically what's happening. So there was 20 executed on the offer there. That's 38 on the offer. So someone is willing to absorb on the sell side here. So there is still some buying coming in. You can see the orders are now starting to pick up a little bit more volume now, which is good. You know, starting to get more opportunity. You need volume in order to make money in these markets, man. Very simply put, literally gold is doing absolutely nothing. Oil's up off the lows. You can see that we've basically absorbed about 100 contracts here on ES. Sellers have anyway, and now we're ticking down. So this is a classic, you know, retest of the support that's been broke, and then, you know, retest now. It would be a great example because I've been discussing with it. If you know, we can see some aggression. We want to see bids been pulled here. Some sellers come in with some size, break the lows and go down and tap this 50 order to see how the market reacts with it. But it looks like buyers are trying at the moment to bid it up, but sellers are absorbing. I certainly wouldn't be buying just yet, to be honest. If I was to buy here, I would only be waiting. Yeah, look at that. We just had 27 left to offer and it instantly ticked down. So someone is literally just absorbing everything that buyers are doing at the moment. Same on. This is truly algo heaven. These markets like this. Now would be the time. Let's see if the sales are going to come in with some size and if the bids are going to be pulled. trade with the stop loss. Yes, yes. Well, this is just me. I personally think that mental stops. Oh, we're at the lows again here in ES. Mental stops are not. It never really worked for me, to be honest, because you get a lot of hopium with mental stops. So I think it's better to just put in a stop, and unless you had a plan to average into the position prior to it, um, if you go your full clip, never average. If you've planned it and you're already reducing your risk, then yes, then by all means you can scale into a position. Um, but if you're going your full size, absolutely not. Just a recipe for disaster. Again, we're back to the problem of if you're full size scaled in to already in a position and the average down, you're not going to accept that loss because you didn't before you took the trade, you didn't expect to lose that amount. So you'll end up not accepting it, and then before you know it, when the market goes further than you thought it was, you've then got double red day. you know, just just fucking accept the loss, man, and shit happens. You know, is what it is. That's the thing. I think if you start averaging in with full size into positions, exactly, that's the thing. You're basically two balls deep to accept it, man. So unless you planned any of that prior to the trade, just don't do it. Just don't bother. You just cause yourselves more pain than what it's worth, man. Honestly, I actually always just average in when I first started, and it's the worst habit to have. Seriously, if you're going to average in, you need to be taking 30% of your full clip. That's the only thing way it makes sense, so that you've got a wider stop and you can average in at a slightly better price. But then by the time you're averaged in, you're in your full clip. It's the only way to do it. Right, ES is about to hit this, some size, let's see what happens. 51 just lifted the offer, didn't even move. Jeez. Okay, let's see if sellers are going to come in and bash this down. Interesting, they've just absorbed 51. Didn't even move the market. Then you just get NQ. NQ is fantastic for correlations, man. If you're trading ES, you need to be trading NQ, or at least have it up, right? It makes a big difference. If you've got if you've got it up, because NQ, wow, there's 100 lot down here. Now, look at this as a coincidence, buddy, right? You've got ES coming down to this level, right, where there's some orders planted, and it's not a coincidence that NQ at pretty much the same price, give or take how relative it is there. So we've either the market in NQ is definitely going to fill this out. We're either going to go bids, uh, but the market is going to fill this out, and then at the same time we'll fill out these orders here. And these, I would be very surprised if these are pulled yet, because these have been here now for like 2 hours, to be honest. Look at the spread in NQ. It's wild. But it's actually not been that volatile tonight, to be honest. But we're seeing We're seeing sellers really absorbing right now. My bias this week was actually to be short, to be honest, just because we were so bid towards the end of last week on really not that great news. I mean, the NFP reports were meant to potentially increase the chances of a cut, but NFP reports first revision are garbage, man. They revise them next week and then it all changes again. Inflation numbers are the key data points that the Fed's watching at the minute. Yankees just skipped a few free prices to the bid. This could go either way at the moment, to be honest with you. There's some battling between buyers and sellers on both ES and NQ, which typically means the longer price battles um, at a low like this, then the more aggressive the push out of the area is. So we're outside of value since open anyway. The gap's been filled. So this is just complete normal Asia session. This is actually a little bit of a tighter range Asia session. Gold has been great if you were scalping, to be honest. NQ's catching a bit of a bid. Boo, it looks like we're going back to retest the breakout area. And if it doesn't hold, then we're back to the point of control for more chop. We wanted to see some action, to see these 50 lots been touched. We could still touch them yet. Mm, 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 mm. Are you in any positions or anything at the moment? Yeah, this whole stream will be there. Yep. Any of these are put on, you can catch it tomorrow, no problem. I normally try and do this at least once a day, to be honest, with the session. Um, it's not. It depends. Normally, I normally do the evening session. I'll stream it, and I'm normally done trading, as I don't really like to do this in trade. I actually did the other day, took a couple of trades live, just because it really shaped up quite nicely for a breakout trade, and I normally don't take breakout trades, but it was really obvious with the order flow that was going in. So, but yeah, it'll be on for you, man. You can check it out. But it was good chatting. Stop by more often, buddy. No problem, man. Have a great sleep. I'll catch you in the next session. Hope you have a good trading week, man. Cheers, man. Take care.
ES size lift the offer. GC size lift the offer. NQ size hit the bid. GC size hit the bid. GC size lift the offer. GC size lift the offer. GC size hit the bid. GC size hit the bid. GC size lift the offer. GC size hit the bid. ES size lift the offer. GC size lift the offer. GC size hit the bid. GC size lift the offer. GC size lift the offer. GC size hit the bid. GC size hit the bid. GC size hit the bid. GC size lift the offer. GC size lift the offer. GC size hit the bid. GC size lift the offer. GC size lift the offer. GC size hit the bid. GC size lift the offer. GC size hit the bid. GC size hit the bid. CL size lift the offer. GC size lift the offer. GC size lift the offer. GC size hit the bid. GC